Hello and welcome. You're watching Property Hotline with me, Kavita Krishnan, on Magicbricks Now, India's first property business channel. Today we are answering all your questions related to financing that dream home. With us in the studios, Kartik Jhaveri. Kartik is the founder and director of Transcend Consulting, India Private Limited. He's also a very reputed financial planner. Kartik, thank you very much for joining us on this show. We have quite a lot of questions and quite a diverse set of questions, I'm told. Deepak has written in through email. He says he took a loan of 10.5 lakh rupees with a tenure of 25 years at an interest rate of 9.65%. Now, Deepak took this loan 2 months ago and he already wants to make a full repayment of the loan within a week. He wants to know that if he clears his loan within a week, how much interest will he need to pay? And the property, he says, is in Baroda. I do know that there is nothing like a prepayment penalty, but then if you were to pay the home loan so fast, so soon, I guess the bank would try to take some kind of a fee from you, right? Because there is a lot of processing and all that. I mean, there's a lot of paperwork that the bank has also done over here to give you that home loan.
Yes, you're quite right. The bank has done some amount of effort, but the bank has also charged you some sort of a processing fee when they issued the loan to you. And then, well, the rules are pretty clear that if you want to prepay it, there's nothing that really stops you from prepaying. So to that extent, yes. Let's answer his question. In terms of the interest that you're going to pay, now I'm just going to do a rough calculation. Approximately the interest rate is 965 on a loan that he's taken. His loan is about 10.5 lakhs, which means on an annual basis, he's paying close to about 1 lakh or so as interest. And which means for a 2-month period, that would be close to about 16 to maybe in the range of 16,000 to 20,000. So that's your answer. You're not paying an awful lot in interest. However, it seems to me that you probably, I'm just making some guesses, educated guesses, that you probably took this loan to maybe have the bank do a thorough due diligence. A lot of people do that. You see, they have the money, they take a token loan, and the bank's procedures are extremely good. They do a fabulous job. At the same time, he may have saved some money on the lawyers as well.
No, Kartik, also tell me something. I mean, say if he has actually gone ahead and taken that home loan just so that the bank does that due diligence.
Right.
A home loan as such is it is a very cheap loan.
Yes.
B, it is also a loan that gives you a tax deduction. Does it make sense to actually clear it off? And it's not a huge liability that he's taken. It's a 10.5 lakh loan.
Absolutely.
So wouldn't it make sense if he has the money to, probably invest it somewhere else, probably buy another property for all you know?
Yes, you're absolutely right. And this is something that all the time, I keep suggesting to people that, look, I mean, prima facie, you have a loan, you can afford to pay the EMIs. And if you have the money, why not actually invest it, service the loan for anywhere between the range of 5 to 8 years. The reason for that is, go ahead and invest your money into the equity market because the business cycle is about 4 to 8 years there. So quite likely that in that much period, you would pretty much double the investment that you've made, as a result of which you can take that profit out and then make a prepayment out of that profit. So wouldn't that be a fabulous thing that, your loan is paid off, you can reimburse yourself the interest as well, and plus the principal or the capital that you have, which you initially invested, is still in your hand, and your property has already appreciated because the property appreciates over time. So look at it, I mean, how many win-win-win situations are there? Your property has doubled, your investment is doubled, your loan has gone down to zero, and you still have all the cash in your hand. So there couldn't be a better solution.
I mean, you will have to end up paying around 16 to 20,000 rupees, as interest if you were to prepay that loan. But, it would rather make sense for you to reinvest that money somewhere else. I mean, why break one asset to create another when you can actually create 2 assets at the same go? Let's move on. We have Shak Parikh, who's written on our website, www.mbnow.in. He says that he saw an advertisement from DSK Projects in Sai Naka, Madhukosh. Now, as per the advertisement, if one books a house with the company, there is no need to pay interest on EMI on the home loan, and the tenure of the home loan is approximately 8.33 years. I remember seeing this ad myself instead of 20 years. He wants to know if it is advisable to buy a project with such a scheme. He also wants to know why aren't other builders giving this scheme if it is such an advantage for a buyer. Okay, we are seeing a lot of these special payment schemes that are coming into the market now. DSK is one. We had something else that came in the Mumbai market a little earlier. How safe are these schemes? Is there something like an interest-free loan? Like you talk about nothing. There's nothing like a free lunch. Do you have something like an interest-free loan?
Absolutely. There is nothing like a free lunch. Now, what happens in case of builders is he's already got some margin going on for him. The other thing is he needs to have cash flows coming in, because the current situation of builders, and for that matter the whole economic scenario, is such that there is very deep sort of need for liquidity. So you don't have so much of liquidity. So therefore, what do? You bring out promotions and offers, because A, you don't want to reduce your prices, and B, you still want to have the sales that you want to have. So what's the third and the next best option that you do? You make very interesting sort of schemes and try and entice the buyer to come and do that. Now, on the face of it, this sounds very nice, that in about 8 years' time, effectively whatever is the cost of my house, I'm just dividing it into 8, 12 or 96 months, and I'm going to pay on an installment of, let's say, 96 months or 100 months, and I'm only paying the principal back because the builder himself is financing. But why would a builder actually want to do that? Because typically he builds a building anywhere in the range of 3 to 5 years, maybe 7 years even if the project is delayed, and then he's actually financing and he's not receiving his cash flow on time, but he's trying to have a sale. Now, every scheme that is launched has to be really thoroughly investigated and understood, threadbare. So we have to read the fine print, we have to read the documents, because very often what happens is it looks very interesting, it looks very enticing, but somewhere in the process what is happening is, like those 80-20 schemes, or like those schemes wherein there is interest-free and all those sort of very attractive sort of words, but at the bottom of the whole thing, it is actually your credentials which are being applied to a bank, and he's picking up some sort of a loan from the bank.
Exactly my point, exactly what I was going to ask you, Kartik, because here, I mean, if you go through the scheme, it almost sounds like the developer is going to use my credentials, my credit history to take the loan on my name, which also means, and I'm asking you this,
yes.
Say that for whatever reason, God forbid, the project gets stuck or the developer is not able to service those loans, will that then, impact on my CIBIL?
Oh, absolutely. Not only CIBIL. CIBIL is a secondary impact. But the first primary impact is that if the builder stops paying the EMI, the bank will start retrieving it from you, because it is ultimately your credentials, and you will be signing a lot of papers. You will be signing the dotted line and saying that, I am actually taking this loan. It's just that through a special arrangement, the builder is the one who's going to pay the interest for me, or maybe the EMI, as the case might be. But at the end of the day, if something goes wrong, ultimately it's your liability. If you don't pay, obviously your CIBIL will get adversely affected. And that means that in future, when you're trying to get other loans, even a few years down the line, maybe as much as 5 or 8 years down the line, that event or that bad performance or that bad patch in your CIBIL is actually going to be like a black mark with you for many, many years to come. And fortunately, unfortunately, it just goes on forever. The saga doesn't end. So therefore, you need to be very careful.
I will come back to the CIBIL score in a bit. But Kartik, also, this entire thing, it also looks like, I mean, this is what I'm asking you, because see, the builder's paying your interest over here.
Right.
Very clearly. The bank is not going to give you a loan below the base rate.
Naturally.
So the builder is footing the bill for the interest.
Correct.
Now, would the builder is going to pass it on to you some way or the other.
True.
So does that mean that probably these properties also come at a higher price, or there is some other way that you are paying that money to the builder?
The property is not necessarily coming to you at a higher price, but the inherent margin itself is quite wide. Because think about it now, your loan, that is the loan that is being taken on our names, is going to be a very cheap loan, somewhere in the range of about 9 to 10%. Versus that, builders are typically able to digest loans of as high as 24% and 30% per annum. So which means if there was not enough margin built into the property price itself, they would not be able to afford those loans. Now the problem is that money itself is dried off, that money is not coming to them. So what is the next best source of revenue? If the bank, so if you don't have private financiers, if you don't have banks giving you money, then you go onto the credentials of individual retail buyers and you use their credentials and get a very, very low cost loan, which is 9 to 10%. So 9-10% cost versus a 20%, 30% cost is a huge saving for the builder. So even if the project gets delayed, even if costs go up, he's still good.
Shak Parikh, essentially what Kartik is telling you is that what looks like win-win to you for the buyer is not essentially a win-win. There are a lot of risks hidden in. It's actually a win-win for the developer. If you do intend to go ahead with that scheme, and if you do intend to buy that flat under that scheme, then you need to do a whole lot of due diligence and then sit with your fingers crossed. Okay, before we move on to the next question, you mentioned CIBIL score.
Yes.
Now, we get a lot of questions about this. What is a good CIBIL score and what can impact your CIBIL score? Is it just the repayment of loans, or does it also include, your utilities, your credit card bills, etc., etc.?
You see, there are a lot of things that are getting mapped into the CIBIL score. Firstly, to answer your question, what's a good score? Anything above 800 is fabulous. So, or even 750 for that matter. So, this is what I understand. So, if your scores are above this range, then it's very good. Having said that, there is still a little caveat. After having a score of 800 plus, they will still investigate your history. And if there is something which has even happened 10 years back or 12 years back, quite shamelessly, they will still ask you why and what went wrong, even if it was not your mistake, and even if you were a genuine client of some institution, whatever the case might be. So that is about the score and evaluation process. Now, in terms of what would happen and what would impact.
Okay, what impacts a CIBIL score? So like you said, for instance, credit card payments.
Yes.
Say I repaid my credit card bill 2 days late, 2 days after the due date. Will that also show up on my CIBIL score, or will it show up only if I default?
No, so default, of course, it will show, but if you are late, even that will show. And how many days are you late by, even that will show. So that will reflect how you are behaving with respect to other people's money. Are you a top-class paymaster, or are you a completely lethargic and carefree person who doesn't really care? So your credit behavior is seen. If you are applying for too many loans, and if you are loan shopping, for example, a lot of people need personal loans. They go around shopping for personal loans. Every time a person is going to approve a personal loan, they are going to check your CIBIL score. So the number of times that your CIBIL score has been pulled up by various institutions also adversely affects your situation, because they are going to think that this guy is in the hunt for loans and he's going to take too many loans. Maybe at some point of time there is likelihood that he'll default, and therefore again people will sort of step back from giving you. So don't really go around shopping unless you really need the loan.
Okay, one more question.
Yes?
Now say I have, at some point in my life, I have been behind on my payments to a credit card or to a home loan or whatever else. How can I set my record right? Is it possible?
Well, you can set your record right, but what will happen is you will have to just have an aging factor, which means that matter will have to become really old. So like I said, today if you are in 2016 and if you had an issue in 2006, for example.
So you're saying even 10 years is not old?
Yeah, it's not old. I mean, it's unfortunate. It's funny because if there are issues of even something like 1,000 rupees or 1,500 rupees, people don't have a problem to even just say shamelessly, and I must say that, sorry, but they reject loans of 20 lakhs, car loans and things like that for something which is like as small as 2,000 rupees. And this happens, you see. So which is why,
So if you're living on credit, you
absolutely.
better be very, very careful. Big brother is watching you. Let's move on. Ankita has written in through email. She wants to know if a married woman can jointly buy an apartment with her sibling without involving a husband. Okay, now this is something that I feel very strongly about. I know the answer to this, but Kartik, go on.
But see, now the thing is, what happens is there's no such set rule. Rules are made by these institutions. Now, for example, if two sisters want to go ahead and buy property together, there is nothing in the world that stops them from doing that. They will be able to purchase the property in their two names. However, when it comes to taking a loan, then there is a problem, because for some reason, lending institutions would feel more comfortable with two brothers taking a loan together, but they would not feel so comfortable with two sisters taking, or even a brother and sister.
Because they are willing to lend to women's self-help groups.
True,
and
absolutely.
they go the distance to do that because they think women are better at repaying loans.
It's not only those dynamics that are playing. They are not doing that because they don't, for some special reason, but they have had some specific experiences in the past, and people learn from such experiences. Now what may happen is, traditionally in India, women have not been in the forefront of taking financial decisions. Most of the decisions, for example, and I'm guessing, are handled by the men in the house, whether it's the father or the husband or the brother, whichever was the case at any point of time in life. So what happens then is, if these people want to start interfering into the title of the property, or not wanting to sell, and when the property is to be sold, or even repayment, so it leads to bitterness, it leads to bad blood, it leads to some sort of family disputes, etc.
Okay, Kartik, I don't buy this at all. But however, tell Ankita what can she do now? I mean, she can't obviously buy it with a sister if she intends to finance it through a home loan. So what can she do?
So what you need to do, Ankita, is apply on your single name. So even if your property is in a joint name, they would, the institution will then take certain undertakings from your sister saying that, this property is still being mortgaged, although you own half of the property, irrespective of whether you've paid or not paid. But any one of the sisters will have to take the entire loan on their own credentials and then be responsible to pay. Now, at the back, if you all still have an arrangement where the other sister wants to contribute to you and give you money on the backside, that's okay. That's possible, because gifts between sisters is completely free of tax. So what you do at the back is your choice. But on the front of it, as far as a lending institution is concerned, the way to get out of this thing is, you will either, one of you, go and apply it with your husbands, or apply it on your single name if the if your income sort of allows you to take that entire loan.
So if they're two sisters, can one person take a home loan, the bulk
Yes.
of it, and can the other person take a personal loan? Though I know that will be a more expensive loan, but is
Yes.
that also an option that they can look at?
Yes, but this will not be equal because the personal loan, typically the tenures are small and therefore the installments will be humongously high and the rate of interest is also high.
And you won't get tax deduction for that.
And you won't get tax deductions also, and the
That's
rate
the
of
recipe
interest
for
will be
disaster.
somewhere around in the range of 14 to 16%. So.
Right. So that's your answer, Ankita. Either go alone, take a home loan. I mean, you can buy it jointly, but one person will have to take on the burden of the home loan. Next, we have Shakti who's called in. Shakti, tell us what's your question.
I'm planning to buy a house and have just started my professional career. So I wanted to know if it would be advisable to burden myself with a home loan, or is it better I wait for some more time?
Shakti, any budget that you have in mind before buying that house?
I would be able to spend nearly 25 lakhs.
You would be able to spend 25 lakhs from
No,
your...
I would require a loan for at least 25 lakhs.
You would require at least a 25 lakh rupee loan. Yes. Okay, so how long have you been working, Shakti?
It's been nearly a year.
Nearly a year. So he's starting very early, Kartik, and that's supposed to be really good. I mean, from the point of view of investment, from the point of view of real estate, but is it good if you want to take a home loan?
Oh, absolutely. I mean, when a young person is starting out life, I mean, one of the best things to do is, because if you need a house, go ahead and buy it. If it's an investment, then okay. If it's a second home, if it's an investment, if you're already living with your parents, and if your basic residential need is sorted out, then you don't need to really rush in for this. But otherwise, fantastic thing to do. Go ahead and do it. And obviously, it's not really a burden. We refer to a home loan, or for that matter, any loan, as a burden. Yes, I mean, all other loans are a burden because you have to pay the interest on that. But the good part about a home loan is that, while you're paying interest, your asset itself is appreciating in value. And it is appreciating much more than the rate of interest that you're paying. So therefore, it's not really a burden. It's a nice thing to do. And it's a great way to, borrow some money and create an asset.
Hold on. Now that you've convinced Shakti that it's a good thing to buy that home and take that home loan, I think you also need to tell him the numbers, tell him the math behind it. How much EMI would he have to be willing to fork out on a monthly basis if he is going to take that 25 lakh rupee loan? Shakti, have you thought of that? Shakti?
Yeah, please tell me.
Have you considered how much EMI you will be willing to pay? You said a 25 lakh rupee loan, but how much EMI are you willing to pay on a monthly
10,000
basis?
is something that I would be able to afford.
You think it's something you'll be able to afford? However, Kartik, for the benefit of all our viewers who are tuning in, if you could just take us through the numbers.
Yes, I mean, absolutely. You can follow some basic rule of thumb. What you can do is, for every lakh of loan that you want to take for a home loan, approximately the EMI would turn out to be about 1,000 rupees per lakh. And we're assuming a tenure of about 15 to 20 years. I mean, the number doesn't change too dramatically. So if you take that way, then 25 lakh loan would approximately cost you 25,000 rupees. Now, for a financial institution to approve you a 25,000 EMI, you need to, in a very comfortable scenario, have an income which is at least 3 times, which means to get a 25,000 EMI, you need to have an income of 75,000. Now,
when you say income, this is take home.
Yes. No, this is the gross income. From that, the reason that they give you 1/3 is because they assume that the remaining 2/3 goes in tax and other payments which you need for your lifestyle. Worst case scenario, the ratio would be somewhere in the range of about 45, very rarely in 50%, but that 50% happens if the income is very wide. In the sense, if the income is, say, 5 lakhs, then one can pretty much assume that you can easily afford to pay a 2.5 lakh EMI, because how much would you spend for personal living? So from that basis, the larger the income, your ratio can go up. But otherwise, if it's a smaller income, then typically, to be very, very safe, rule of thumb, take 1/3 of your gross income, and that would be the EMI that the banks would be happy to sanction to you.
Right, Shakti, though, that's your answer there. It's a great decision if you plan to, buy property and take a home loan, and you're starting early, so that should hold you in good stead. In fact, going forward, when your income does increase, you can actually look at selling this first home and buying a bigger home. So you can, keep upgrading as you move up the pay scale. And you'll need to be prepared to pay at least 25,000 rupees as your monthly EMI, right? Thank you very much for calling us.
Thank you.
Thank you. And all the best with that home purchase. Kartik, another related thing to this. Now, one of the biggest, stumbling blocks when it comes to buying a home is the down payment that you need to pay on it. And the down payment can be quite a bit. Now, if you take a city like Mumbai, where the average price of a 2 BHK is around 1 crore, it means you have to pay 20 lakh rupees out of your own pocket. Now, I don't know too many people who have 20 lakh rupees to pay. I mean, I would be taking a home loan if I had 20 lakh rupees. How do you really put together that kind of money? I mean, taking loans from friends and families, of course, one thing. But how do you plan towards buying that home?
Yeah, so what we need to do is we need to first have a very clear-cut idea in terms of when we are going to have this thing. Now, there's always a little bit of jugglery that one needs to do, whether it's a rental property or buying this home loan, because in the interim, you have to pay a rental also, plus you have to save something to conjure up this money. So lots of things happen. Now, take for instance that if you have got about 2 to 4 years, so if you've got a short period of time within which you want to take a house purchase, then you need to start aggressively putting up money, cutting expenses, whatever be the case, and start putting things. And unfortunately, you can't even take too much of risk on that money. You can't be into volatile instruments. You just have to be into simple things like recurring deposits and liquid funds and short-term funds, because you don't want any volatility and you want to earn the best bang for your buck to maximum possible. So you need to start, collating all this money. Then, of course, comes in the personal loans and the family loans and so on and so forth. So you can tide over that 20%. It's not really 20%. You should actually budget for 30% of that money. Because to start with, you'll have to pay stamp duty, you'll have to pay VAT and service tax and all of those things, which later on you will get reimbursed through the loan whenever that happens. But just to get your agreement done, even the MOFA, which is the Maharashtra Ownership of Flat Acts, they say that you have to have 20% payment done. Now, to have 20% payment done and to have a registered agreement, you also need to pay the stamp duty, which means you should budget for about 30% of the value in terms of your cash availability to start out with. And then, if you have a longer period now, let's say if you've got a period of something like 5 to 8 years, then you definitely want to think about doing SIPs. Whenever you get bonuses, put it again into your funds, and then you will have to aggressively, get into volatile funds. You'll have to get into equities because you need wealth creation. So first few years of your life and your career, you'll have to do the wealth creation, and then this will happen. If you're married and if you have double income, which is coming into your household, and then, things might get preponed a little bit, but the fact that you need to start saving up in a big way is, nothing is a given.
Okay, Kartik, very, very quickly, we have a couple of more questions, but very quickly tell me this. You said a fixed deposit, if it's 3 to 4 years.
Sure.
So on an average, per month, how much do I need to save if I want to, set aside 20 lakh rupees for that home loan?
So,
for that home.
Let's say if the target is about 4 years time, then you need to at least put away about 4.5 lakh, about 4 to 4.5 lakhs each year, so that the rest of it will get into compounding, and which means you'll have to save about at least 35 to 40,000 per month. 35
to 40,000 per month. That is the kind of savings you're looking at if you're looking at a nest egg, building a nest egg of at least 20 lakhs to buy a dream home. Moving on, Sandhya has written in through email. She wants to know if it is advisable to go for a pre-closure of a loan if one has money to repay. She says that she's a working woman, she gets tax benefits, or she wants to know if it is advisable to continue with the loan and opt to buy another house and have the 10% advance to pay the builder. I think, Sandhya, you've answered your question yourself. However, let's get Kartik's view on it. Kartik, you already answered this one.
Yes, we've already answered this. But I want to give you another little tip, When we are buying real estate, don't blindly go into buying a lot of real estate. See, it's a white elephant. It's very hard to maintain it. You'll have maintenance to pay for it. There are inheritance issues and etc. Things that will crop up buying properties. So try and maintain a ratio of 1:2. Which means for every 1 rupee of real estate that you're going to invest in, you should have 2 rupees outside real estate. Now that 2 rupees could be into fixed deposits, mutual funds, shares, whatever you like. But 1:2. Worst case scenario, 1:1. So which means if your total net worth is say 100 rupees, out of that 50 rupees for real estate and the other 50 rupees for other things. Because when you want money for whatever financial need, responsibility, aspiration, dream of your life, you will not be able to sell off that property in an instant. And anyway, you don't want to go in too much into property because, if the markets are down, you will not have too many takers and buyers.
Forget Kartik said that. I will not, you should be investing in real estate because frankly, that is the one asset that is still holding strong. Look around you, the markets are in tailspin globally and within the country. The rupee has crashed, but real estate is holding strong and in fact has driven most of the bank numbers also. If you're looking at the bank earnings, home loans are where the growth is. Home sales are also picking up. So yeah, real estate is probably a smart choice, smart investment choice over there. But like Kartik said, you need to balance it out. Don't put all your eggs in one basket,
Yes.
right? And also, a quick programming update for all you regular viewers. There is a biggie coming your way on Friday night, 9:30 p.m. There's an exclusive concrete dialogues that we're doing with the Ahmedabad Municipal Commissioner D. Tara. Our editor Faye D'Souza gets you Ahmedabad's smart plans. Be sure you tune in for that. With that, we're completely out of time on today's edition of Property Hotline. But we'll be back on Friday with another guest to answer all your questions related to buying, selling, or investing in property. Kartik, thank you very much for coming in. And you keep your questions coming in. You know how to reach out to us. You can write into us on email, on Facebook, on our website. You can also send in your video queries to feedback@mbnow.in. And what's more, you can tweet to me. I'd love to hear from you. That's my Twitter handle on the screen. You can also call in live like all the other callers that you saw tonight on the show. So keep those questions coming in. Keep tuning in. Thank you for watching Property Hotline. Keep watching Magicbricks Now.